Alrighty, what's going on, guys? So this is a beginner's guide to getting funded in 2025. I made this video to help out all of the struggling and even not struggling traders who are looking to pass their first funded account, or maybe they've tried multiple times but they haven't been able to pass it, or even if you're an intermediate trader and you're just looking for ways to pass your funded account. I made this video for you guys. And yeah, I'm going to be going over the best prop firms with the, best evaluation rules, with the best payout policies. I'm going to be going over everything. I'm going over my strategy. This just isn't a video about the prop firms itself, but actually how to pass them, okay? So for those of you guys who don't know what a prop firm is basically, it is a company where you buy a challenge, you pass the challenge, and they allow you access to trading a certain amount of capital that is set. And this is in like the tens of thousands of dollars. So imagine trading with that much capital, okay? Now, the bonus to this is that you don't have to have that much money to get into this. You actually don't need that much money, which we'll be going over here in a second. But yeah, so it's basically a way for you to use capital that you don't have. And once you use that capital, you can use that to take trades and then make money from the trades that you take with that capital and receive payouts and get paid out that way. Prop firms have made me so much money, and I'm here to share all of the secrets that you guys need to know and everything that I've used to take advantage of milking these firms out of their money. So it is all in this video, so let's go ahead and get right into it. So the first firm that I will be going over is TakeProfit Trader. Here's why. So TakeProfit Trader offers basically the most unique thing that no other firm does, and that is daily payouts, okay? So one thing you'll see with a lot of these funded companies is they don't offer daily payouts. And with a normal live account, you can take your money daily, so they simulate kind of a live environment, which is something extremely useful and something that other firms are not doing. So let's just quickly go over basically what everything on the screen means. You're gonna see 25K, you're gonna see 50K, you're gonna see 75K, 100K, and 150K. All right, these are the different sizes of capital accounts, meaning that if you purchase a $50,000 evaluation, you're going to be getting a $50,000 trading account. Now, it's very important I mention this is not live capital, okay? This is demo. And the thing is, with the evaluation part of the challenge, you are going to be on demo. And then when you get funded and pass it, you'll still be on demo. But with the funded one, you can actually take the payouts. Now, after a while, they will move you to a live account if you do get enough, but we'll get into that later. So basically, the most popular ones are going to be the $50,000 account, which is the ones that I use personally. I do use some 25Ks, but not with TakeProfit Trader. We'll go into that later. And then we have a 150K. So the reason that these are popular is because 150K is obviously the max you can get with this firm. It allows you the most room and the most earning potential. And then with the 50K, it's a nice balance because it allows you to have good earning potential, great earning potential really, and it allows you enough, drawdown. So let's go into what drawdown even is. So as you can see over here, you're gonna have a profit target, then you're gonna have a end of day trailing drawdown. First of all, let's just go over the entire point of the test, okay? So the test is basically you have to make a certain profit without losing a certain amount of money. So as you can see right here, a profit target is going to be $3,000. All right, I'm gonna zoom in just a little bit more to make it easier for you guys to see, but there you go. Okay, so your profit target is $3,000. You need to be able to make $3,000 on this account without losing $2,000. Okay, so that's where the challenge is in this. And here we go. You're also going to see where it says daily loss limit. All right, this was an old feature that some other firms have, but they do not have it anymore. They just have it there as kind of marketing to say that they removed it. It's a firm doing their thing. So yeah, you have to hit $3,000 profit without losing $2,000 profit. Now, let's go into what EOD, which is end of day trailing drawdown is. Trailing drawdown is basically, say your account is at $50,000. All right, let's actually do a little diagram here. So let's say your account is at 50K. All right, so your account is at 50K, and let's say you make $1,000 profit, and now your account is at 51K. All right, so if we look back, your trailing drawdown is $2,000, meaning that what is 2,000 less than 50K? All right, 48. Okay, so that is going to be your starting balance, your drawdown. So if you go below 48,000, your account gets liquidated and you'll have to buy another evaluation and try to pass. Now, what end of day trailing drawdown means is that, okay, let's say on day one, you make $1,000. Okay, so now your account is sitting at 51,000. So 1,000 more than the starting amount of 50K. This means that once that trading day ends, your new account balance for the next day is going to be 2,000 less than 51K. So in that case, it would be 49K. So that is what end of day trailing drawdown is. So it means that the drawdown moves with you. Okay, it's not static, meaning it doesn't just sit at 48. There's some firms that offer that, but not many. So if it starts out at 50K and then it goes to 48K, every time you make a profit, it's going to move up with you. Now, the good thing about end of day trailing drawdown is that this is based off of realized gains. Okay, so you don't have to worry about getting taxed on unrealized gains. So yeah, so let's go back to our chart here. So that's basically it. Now, the next thing you need to know is that there is a monthly fee. All right, so if we go here, we can see it says $170 per month. Now, it's basically never this amount. All firms do this for marketing. They'll say it's this much, there's a discount going on. It's all marketing. But the thing about TakeProfit Trader is they genuinely do have some of the best deals. So currently, right now, you see how it says 170. You can actually get a 50K account for, I believe it is 125. So you can get it for 125 or it's 115. I'm not sure exactly. It might be 115. I actually think it is 115. But yeah, with the current discount code, which is 30% off plus no activation fee. That's very important that you see the last part. This is no activation fee, because basically every firm is going to want you to pay an activation fee after you pass the account. It's a way for them to make more money, because keep in mind, they make the majority of their money off of people failing. Trading is not super easy, so that's how they make their money. So they need as many ways to make money, so they're going to have activation fees. But TakeProfit Trader right now has 30% off plus no activation fee. So it's either going to be 115 or 125. I'm not sure exactly off the top of my head, because I'm literally, I don't have a script for this. I'm just going off the top of my head. And then you have no activation fee. So to claim the 30% off plus no activation fee, just use code GSTrades. I am affiliated with them. They're the only firm that I am affiliated with, and that says something because I'm extremely picky with who I pick to be affiliates with. And they are genuinely one of the best firms out right now. So I just wanted to throw that out there. It is 30% off plus no activation fee. It's one of the best deals right now, and it's the only firm that has daily payouts. So we'll actually go over that next. So let's just go over here. So what happens when you actually pass the account with them? Well, when you pass the account with them, you are going to now have a 50K account. With this 50K account, you are now going to be able to have anything above 50K is technically profit that you can take home. But there's only one catch with TakeProfit Trader. You have to make your drawdown as profit before you can start taking the profit. All right, let me explain what that means. So remember how we have a $2,000 loss limit? What you have to do is you have to make $2,000 profit. All right, so now your account's going to be sitting at 52K. Now, anything over 52K, you get to keep and withdraw that exact day. All right, so that's very important. Most firms will make you wait like up to 2 weeks, sometimes even once a month to even take a payout. But this is the only technically downside with the firm. You do have to hit a buffer. It's called a buffer limit. So once you get over 52K, you can keep not all of the money. You get to keep 80-20% profit split. So you start off, you get 80% of the profit, they get 20%. Okay, so it's a really good profit share, especially for what you're getting. Keep in mind, daily payouts are extremely rare, and this is basically the only firm, I think this is the only firm that does it. So yeah, except for having an actual live account. Let's just say that you make $2,500 on your first day. There's no limit, there's no consistency rule to this, all right? So let's just say that you make $2,500 on your first day. You get to keep 500, but you get to keep your 80-20 split of 500. I don't know what that is, but do the math. That's what you get to keep. You can withdraw it that exact same day, and it will hit your bank account that exact same day, which that is something very rare with firms. I know I keep saying that, but it's very important that you know that. So yeah, that is how TakeProfit Trader works. So yeah, let's go into the next firm. Alrighty, so our next firm here is My Funded Futures. This is my second favorite firm currently out right now. It's basically tied with TakeProfit Trader. Now, here's the benefits of My Funded Future. It's basically the same amount to get what's called their Starter Plus account. They have 3 different types. Actually, I think they have 4 types of accounts. They are going to have a Starter Plus, an Expert, and then I think they have one where you can kind of go into a live account. It's pretty expensive though. So my favorite personally is going to be their 50K Starter Plus. So this is the Starter Plus account. It's going to come in at around $127 per month. And this, you can use a coupon code. I don't have one personally. I might have one in the future, hopefully, because I do love the firm. Maybe by the time you're watching this video, try GS Trades at my work. I don't know. If not, find somebody else's. But yeah, so this is the account that I like to use. So let's go over their rules. So with the 50K right here, their max position size is 3 contracts, and I kind of forgot to mention that on TakeProfit Trader. But yeah, they all have max position sizes. So we'll go back real quick. You can see it, max position size, 6 contracts. So you can use 6 E-mini contracts or 60 micros, okay? Just had to throw that in there because I forgot about that. And then your max drawdown is the same as TakeProfit Trader, so it's 2,000. All right, and your drawdown mode is the exact same, end of day. So, and there's also no activation fee, so they're kind of tied. But the thing is, they don't have the same payout policy. All right, so basically you have to make 3K, and they don't have a daily drawdown, just like TakeProfit Trader. They have microscaling, which microscaling is essentially, if you guys don't know, if you have one NQ contract, NQ is the mini of NASDAQ, and then if you have one MNQ, that is a micro, and one micro is a 1/10 of the NQ contract. So basically, if you use one NQ contract, that equivalates to 10 MNQ contracts. So it's just saying that you can scale that way. It's not capped at 3. It's not capped at like 3 MNQ and 3 NQ. No, it's 1 NQ and then 3 NQs and 30 MNQs. Sorry if that was a little bit confusing. But yeah, and then here's another thing. There's a 50% consistency rule. This is very important, meaning if you are trying to pass this account in a day, you cannot do that. And that's very important to point out because your profit target is 3K. All right. So say that you try to get all 3K in one day, that violates a 50% consistency rule. That means that in bare minimum, it has to be 2 days to pass this account. Meaning your first day you have to make 1.5K, and then your second day you would end up making 1.5K if you wanted to pass it the fastest way possible. You don't have to make a certain profit per day. I'm just giving an example. This is the fastest. You'd have to make 1.5K each day, which does get easy once you get to the hang of it. Now, there are other plans, like they have a starter account that doesn't have that, but the payout rules for the starter plus is why I'm picking this, and I'd rather have this disadvantage, okay? So you have your consistency rule. So this is also good, especially if you're like a beginner trader. This forces you to not like just full port everything and just like, start tweaking out and just like trying to full port your way to passing. You actually have to like wait. It's making you wait, which is a good thing. So yeah, and then like I said, no daily drawdown. And this is for the funded. This is after you pass the evaluation. They still have microscaling. It is a little bit different though. It's a 5-to-1 microscale. And then they do not have a consistency rule on the funded account. This is extremely important. This is why I picked the starter plus, because there's no consistency rule on the funded. So let me make this clear. When you're on the evaluation, there is going to be a consistency rule. But when you're on the actual funded, there's not going to be one. If you did the starter account, which is cheaper, you would have no consistency rule on the evaluation, but a consistency rule on the funded. So I'd rather pay the extra $30, $40 to have no consistency rule on the actual funded. It's extremely important. All right. So this basically means that if one day I just make $1,000, I don't have to worry about having to make extra to fit a criteria for a consistency rule. Okay. And TakeProfit Trader doesn't have a consistency rule either. I don't know if I mentioned that already, but yeah. And this payout is basically, it's performance based, meaning your minimum days, you have to trade 5 days, and your minimum profit per day is $100. Your minimum payout is going to be $250. Okay, so this basically just means that you have to make $100 a day 5 times. You don't have to do it in a row or anything. This could be over the span of 30 days. Okay, it could be any time frame. I do believe they have an inactivity after 2 weeks, so you just need to play. You could literally place one trade and exit it immediately, just to count it as a trading day. But yeah, the criteria is make $100. In 5 days, so 5 days of $100 profit, and then you can take a payout. They do have a profit split, but they do let you keep your first $10,000 of profits with no split, which is pretty nice. Their minimum payout is $250, so yeah, it's very easy. But here's the only downside. Your profits are capped. So your profit target, or not your profit target, but your payout request is 1.2K, meaning the most you can request at a time is 1.2K. All right. Now there is a good thing about this. You can have 3 accounts with them, meaning that is a crazy 3. I don't even know how I did that. Okay. So you can have 3 accounts, meaning 1.2 times 3 is going to be 3.6K. So you can technically make 3.6K a week. All right, which that is really good. And personally, I copy trade on 15 accounts from different firms. So this is where like you can make a ton of money. So that is basically the rules for my funded futures. It comes in at basically, I guess, $2 more, maybe $10 more than TakeProfit Trader. But these are the rules right here. So that is the benefits of these prop firms. And now I'm going to go into actually how to pass them. I'm going to be showing you the strategy that I use to pass these accounts, showing you guys my full risk management plan, literally everything you need to know to pass these accounts. Okay, so let's go ahead and get into it. Alrighty, so this is a strategy that I use to pass funded accounts and get payouts. And real quick, I just thought I'd plug in this, but I do have a completely free futures trading course that goes over this strategy and all of my different confluences, literally everything you know to become profitable. That is going to be the first link in the description. It is an insane course. It's completely free, and it's super good. Just thought I'd throw that in there. But let's go ahead and continue on. So basically, I'm looking for liquidity in inverse fair value gaps and retracements. Okay, so let me explain this is a framework of what I'm looking for, and I'm going to be showing you guys actually, this is today's chart. We took a win this morning, made around $2,000. So let's go ahead and just show you what I'm looking at. So this morning I see, all right, there's a massive push down, like literally like 477 points yesterday. So I'm going to draw out my fib tool. All right, I'm just looking, I see, all right, we have our equilibrium, which is just the half point of this big trend. And now you don't need this for my strategy. I'm just showing you kind of how I was determining, kind of levels. So I see, all right, equilibrium is sitting around here. Price, I know price wants to rebalance ranges. So when you see price make a heavy move down or up, expect price to rebalance a range. And 0.5, which is equilibrium, is a great level for it. So here are my Fibonacci retracement settings. So just copy these, take a screenshot. So I'll give you like a second to do that. And then okay. So here's what I notice. We have equilibrium right here. I know the market wants to trade back into equilibrium because it has to rebalance this massive leg. So we're going to just plot that, okay, it's around here. But more importantly, we see these two equal highs. All right, we see I'm on the 5-minute time frame. We see 1:35 p.m. and 1:40 p.m. have a very similar high. It's equal highs. So we're going to mark that out. That is going to be what's called my draw on liquidity. All right, so going in today, I'm saying, all right, we're just looking and I see, all right, price already creates, this is my old strategy. Basically, it's just liquidity sweep and then an inverse fair value gap. And that is shown like right here. This is a good trade, but personally I wasn't on the charts at 8:35, so I couldn't have caught it. So so I was basically just sitting. I saw, all right, price is likely going to be bullish. I just saw that price was running upwards. I see that we're taking out all of these highs. We're sweeping a bunch of liquidity, and liquidity is going to be mapped out by highs and lows. The best liquidity is going to be marked out by these highs and lows that are basically, I call them very prominent, and they're like out in the middle of nowhere. So let me just draw like what I mean. I mean something like this. Okay, so no diddy, but like look at this. This is a very prominent draw on liquidity because, as you can see, it's very prominent. Everything else down here is farther away from it. Okay, so that's what I mean by a prominent pool of liquidity. So we can see that we have one right here. See how it's out in the middle of nowhere. And then right here, it is surrounded a little bit, but still, look, we have these highs, and then we have a higher high, and then equal highs, and then lower high. So we're creating a swing point here. We want to mark that out. So as you can see, price ended up sweeping liquidity right here, meaning price traded slightly above it and took out orders. It then started a reversal. So this is actually the trade that I took today in the live trading with the inner circle. Real quick, if you guys want to trade live with me every single day, that is another link in the description. It's the inner circle. Anyways, so what we're going to do is we're going to scale down the time frame. All right, so we're going to go to the 1-minute time frame. All right, so I have that level marked out. Now, check this out. we want to look for what's called an inverse fair value gap. All right, so in order to know what an inverse fair value gap is, first of all, you have to know what a fair value gap is. So a fair value gap is simply just a candle. It's a 3-sequence pattern. All right, so right here we have a fair value gap, and for your average person, you're looking at this, you don't know exactly what this is, so let me explain. So it's a 3-candle sequence. You need a middle candle right here. This is what's going to form the actual gap. All right, you're going to have candle 1. You want to see the high of candle 1, so the wick. All right, we can see that this wick does not overlap candle 3's bottom wick. Candle 3 doesn't even have a bottom wick, okay? It literally opened and went straight up. So basically, you're just going to mark this out. So the bottom of candle 3 and the top of candle 1, and notice how it creates this gap. So you can draw the line, you can use the box tool. See, this is what is called a fair value gap. So price likes to trade into this level, and price likes to trade into it and then continue in the original direction. And you can actually see this on the screen right now. This is a bullish fair value gap because this is a bullish candle. And we can see that look how price wicks into the level and uses it as support. This is why support and resistance doesn't work very well unless you're using fair value gaps, because fair value gaps will give you the best forms of support. So as you can see, these candle wicks tapped in, and then price continued up higher. All right, so it's important that you first understood what a fair value gap is before I show you an inverse. So real quick, just a quick reminder, price is going to trade into a fair value gap, and then once it trades into it, it's going to continue in the original direction of this OG fair value gap, all right? But here's where an inverse fair value gap comes into play. This is when you see a fair value gap get completely disrespected. So as you can see, we have a fair value gap right here. So let's explain why real quick. You see the high of this candle does not overlap the low of this candle. So it creates a fair value gap. It's a bullish one. But notice how this black candle to the downside completely just runs through it. You look at this and you're not going to expect price to basically, trade back in the original direction. We're not wicking it. We're not showing resistance. We're actually showing everything that's like, okay, price is actually probably going to go lower. This fair value gap is invalidated, all right? And it's also disrespected. Those are 2 ways I'll describe it. So invalidated and disrespected. So you see that price runs through it, and then we get a close below. The second we get a close below a fair value gap, that is when it becomes inversed. All right, so let me just show you. We had our original fair value gap, and then price traded below it and then closed. This is the close of the candle. That creates the inversion. This is where I enter the trades. Right, so we can see that the candle closed right here. I'm going to enter my short immediately after that candle closes, and that will be my entry. But this will not work every time. Let me show you something that will increase your win rate and something that you need to have to even take the strategy. Okay, if you don't have, there's a reason this worked, and that if you try this without doing the thing I'm about to tell you, it might not work, okay? You need to have a liquidity sweep. You see this line marked out? This is algorithmic. You have to have this, all right? So remember that line we marked out. Let's go back to the 5-minute. It was this high. So when we go to the 1-minute time frame, we can see that price swept out that level by literally a couple points and then immediately formed this inversion. Okay, so I finally got the replay mode watermark to turn off so I could clean up the screen a bit. But anyways, we can see that price swept out that pool of liquidity and then we closed below the fair value gap, completely disrespecting it. So what we're going to look to do is we're going to look to target another pool of liquidity or a fair value gap. So as we can see right here, we have another fair value gap. It's this one, all right? So I'm going to anticipate that price will likely trade to the bottom of this fair value gap. So even if I think it's going to trade to that level, let's just be extra safe and let's put our take profit just slightly above it, all right? So I'm looking for price to trade to this level. I have everything that everything's coming together. We have a liquidity sweep, we have an inverse fair value gap, and we have a target, which is either going to be a fair value gap or it's going to be a liquidity sweep, or sorry, a liquidity point. So it's safe to enter. So let's see what happens. There you go. So you can see that this trade ended up playing out, and this is a trade that I actually took today in the live trading. So this is a strategy that I want you to use to pass your funded accounts. Okay, so a liquidity sweep, an inverse fair value gap, and then a draw of liquidity, which is going to be a fair value gap or another point of liquidity. All right. So just a brief review of what we just did right here. We marked out this prominent swing high, which we'll just put right there. So we marked out this swing high. We go to the 1 minute time frame. We see that price swept out this level because we wicked over it, and then we formed a bullish fair value gap. You can see that this bullish fair value gap got closed below, so that is where you'd enter the trade. You'd put your stop loss at the high and then target another unfilled fair value gap. And as you can see, trade played out. So that is a strategy that I want you guys to be using to actually pass your fundeds. But now it's time to go over the position sizing and how much you should be aiming to make and risk per trade with these fundeds. So let's go over here. All right, so here's the risk management plan that I want you to be using for the evaluations. I want you to use 1% risk through 1.5% risk per trade. Okay, so what would this be on a 50K? Well, 1% is going to equate to $500, and then 1.5 is going to be $750. All right, and I want you to be trading on NQ. All right, not MNQ. You would want to be trading MNQ with my strategy on the actual funded account. That's personally what I like to do. I have members trading on NQ too, but I like to trade MNQ. But with this account, I want you to use NQ. So I want you to risk $500 to $750 per trade, and I want you to basically take profit at $1,500. So I want your take profit to be $1,500, and that is only if your trade allows it. And what does that mean? That basically means, like, let's just say you are in a long position. Your take profit is all the way up here. Okay, your take profit's all the way up here, but you only need to get to here to make $1,500. So change your take profit from your original level and just target 1,500, because that is going to be your 50% consistency rule, which applies for both TakeProfit Trader and My Funded Futures. Okay, so you want to target 1,500. Okay, and like I said, that is only if your original take profit is higher than that profit amount. Okay, it might not be, it probably usually won't be, but that's just FYI. And I want you to be using one NQ contract, all right? And that is the max I want you to use. I don't want you to size up to 2. Just use one NQ contract per trade, risking 1% to 1.5% per trade, and you should be chilling. So yeah, so that is basically your trading plan. And remember, you don't want to take negative risk to reward. So let me explain what that is. So your risk to reward ratio is basically how much are you risking to make how much. And you can see your risk to reward ratio gets displayed right here. So the least amount of ratio, the smallest ratio I will allow you to take and the smallest I will take is 1. A 1-to-1 risk to reward. People will hate on this, but those people are unprofitable and they're broke. So 1-to-1s are really good. People like to hate on it because, oh, it's not fancy, it's not cool. It doesn't matter. If you have a high win rate, which this strategy does, that 1-to-1s are perfect. So you can have a 1-to-1 or higher. Okay. Now I don't recommend going for like crazy home runs. Today we had like a 2.78. But if you have something like, you can have a 3 risk to reward, it all really depends. It just really depends on the trade, but you can't go lower than 1. So the second you're drawing out your tool and you see this go below 1, that is when you can't take the trade and you'll have to reevaluate. Okay. So yeah, that is the entire risk management plan of what I want you to do to get funded. So there you guys have it. That is how to get funded in 2025, the full beginner guide. And yeah, let me know if you guys have any questions whatsoever. I'm always active in Discord and on Instagram at GS Trades on Instagram. And then the free Discord is in the bio. And listen, guys, I know I said this earlier, but if you would like to live trade with me every single day, go to the top link in the description and join the inner circle. I do daily live trading. We have tons of classes. We have classes every week, and I have literally like 30 plus classes already recorded, so you can join and get those instantly when you join up. So there you guys have it. I will see y'all in the next video. Peace.